of easing, certainly not to the degree anyone thought could be possible. And so how do we even know how the Fed gets out of it and how to position your portfolio?
Well, here's the thing. I don't think the Fed will sell anything that they bought. This whole notion of unwinding, I think, is silly.
Why?
They don't have to. I think if they simply stop buying new issuance from the Treasury, stop soaking up a lot of the issuance from Fannie and Freddie, just that in and of itself would be a big change. The Fed's balance sheet's not that big, frankly. You know, I know a lot of conservatives go on about this, but I don't worry about that so much. I think the real change, though, is when investors and even consumers start to understand that what we're looking at today, this is the new normal. This is the new run rate, if you will, for the economy in terms of jobs, consumer income, etc. And as that realization, as that acceptance occurs, I think you're going to see a lot of changes in asset allocation and the way investors look at medium to long-term horizons, simply because they're going to have to recalibrate their expectations about returns. A lot of investors on Wall Street still believe that they should make 20–25% a year when the economy is growing at a tenth that rate. So I think that, to me, is the biggest challenge when QE ends, because people think the Fed is going to get us back to where we were, and it's not going to happen.
So what does that mean for the stock market, which obviously has been on a tear this year?
Well, it's been on a tear, but think about it. For every $4 in earnings we've seen increase, say, over the last year, year and a half, we've had $1 in revenue. So the foundation to really sustain those earnings growth rates is not there. I think you're going to see earnings disappoint later this year. And it's simply a function of the fact that corporations have been mostly hitting their earnings, especially banks, for example, with cost cutting. If you go through the Q1 earnings numbers, it's all about cost cutting. So I think what we've tried to do since the crisis is hold things together, maintain liquidity in the markets, and try as best we can to keep enterprises, keep whole economies intact. But we don't really still accept the fact that we're not going to grow at the manic rates we did in, say, 2005, 2006. That wasn't normal.